Thank you for listening to the Real Estate Voice podcast. This is Vernon R.E. Jones, managing broker, owner of Jones Homes, and for over 35 years, we have serviced the 7-county Denver metro area and beyond. The Federal Reserve Board and their need for independence. First of all, let me say what the Federal Reserve is. The Federal Reserve is the U.S. Central Bank, created by the Federal Reserve Act of 1913 to establish a monetary system that could respond effectively to stresses in the banking system. The Federal Reserve System includes the Board of Governors, a federal agency located in D.C., Washington, D.C., and 12 Federal Reserve banks around the nation. The Federal Reserve System performs 5 key functions that serve all Americans and promote the health and stability of the U.S. economy and financial system. It conducts the nation's monetary policy, promotes financial system stability, supervises and regulates financial institutions, fosters payment and settlement system safety and efficiency, and promotes consumer protection and community development. The 3 key entities, the Federal Reserve Board of Governors, a federal agency in Washington, D.C., the 12 Federal Reserve banks operating around our nation to help ensure all household, community, and business economic conditions and perspectives inform Fed policies, actions, and decision-making, and the 12 voting members from around the system who serve on the Federal Open Market Committee and help set crucial monetary policy. Now, why should it be independent? Well, first of all, anybody that knows economics 101 understands that any presidency, be it Libertarian, Republican, Democrat, you don't want to give them control over the Fed just to implement short-term policy changes to per se affect a political election. Most people understand that the Fed has to stay within a particular realm so we can offset inflationary pressures and stave off an unstable economy. Because guess what? You might get an unscrupulous administration to say, let's lower rates to 1%. Then we got inflationary pressure. So, okay, money's cheaper to get, but guess what? Things are a lot higher to cost. And we're already in an inflationary environment right now, probably holding at around 2.8% based on the last counts that I've seen. We don't want the Fed to be politicized again because its independence is needed to ensure stability, not by the whims of any political party. The need for the Fed to remain independent is viable. What does independence mean? Well, independence means that the Fed can set interest rates without interference from Congress or the White House, even if politicians are unhappy with Fed policy, and they say so publicly. I remember when Lyndon Baines Johnson, he was the president in the 60s. Some of my clients may not have been born then, but he complained about the Fed. Many presidents have claimed about the Fed, believing that the Federal Reserve Board moved too slow on raising interest rates, too slow on lowering interest rates, too fast on raising them, too fast on lowering them. So the thing is, that's why the Board of Governors, the 12 Board of Governors, advises in their conversations, hey, this is what's going on in my market, your market, what's going on nationally, that we can say, okay, if we do this, it might create a bit of space based on the economy that we have now, not on, hey, I want to lower interest rates because I want a political push from the lower interest rates. And don't get me wrong, everybody wants lower interest rates. But interest rates need to stay at a stable point where the banks can lend money. And yes, banks do make money by lending money out. But if the money is not appropriately judged based on the economy, in other words, let me give you, the bank is getting their money from the Federal Reserve, let's say at 2%. Okay, and then they give it to American people at 5%. So obviously that's a spread that the Federal Reserve Board gets, not the Federal Reserve Board gets, but the banks that buy the money get the money from the Fed, and they kind of turn it over and they say, okay, this is our profit per se, minus operating expenses and other budgetary concerns that banks have to deal with. Congress could, of course, change the law, but no bill to alter the Fed's mandate or governance has gone very far. That's because members of Congress recognize that if they or the president, and I won't even say the president, I'm going to say a president, were able to directly influence the setting of interest rates, higher inflation would be the likely outcome. Central banks in nearly all major capitalistic democracies are similarly insulated. Elected governments set the central bank's mandate, but the central banks have the freedom to deploy their tools to achieve that mandate. The rationale is that elected politicians will tend to favor lower interest rates now to boost the economy, but again, this comes at the expense of more inflation later. That's not in the best interest of the overall economy. Independent central bankers, the argument goes, can make unpopular decisions, such as raising interest rates when circumstances demand. Academic research supports the case that economies with independent central banks tend to have lower and less volatile inflation rates. I will kind of leave that to you to do any other research you need to do on that. There are many institutions that the United States have that should be independent, away from political interference. And I support that type of policy. And I especially support it with the Federal Reserve Bank. So the Federal Reserve needs to remain independent. Thank you for listening to the Real Estate Voice podcast. This is Vernon R.E. Jones, hoping that you have a great weekend. And please, whatever you do out there, be safe. Any questions, you can always call us at 303-359-8218. Take care.